I got this great stat from Andrew Sliman at Morgan Stanley, and he said if you look at the midterms, the last 18 midterms, the market has rallied over the next 12 months, post-midterms, every time, 100%, regardless of the outcome. So at the risk of being glib, does it really matter, the outcome of the midterms for the markets?
So that's a great question. So he's exactly right. We haven't seen the market down in the 12 months following a midterm election since 1946. And what really is that elections matter more for sectors than they do for the market as a whole. So depending on who wins, regardless of if it's the Democrats or the Republicans, the market's going to rally because there's going to be more certainty heading into the next year. But you're going to see certain sectors are going to benefit or be hurt by the policies of whichever party takes control.
So, Jeannette, which sectors are those before we move on to Peter?
So just a couple to name is that, so if the Democrats win control of both chambers of Congress, you'd see the consumer staples would benefit, as well as the industrials and materials sectors, because you have a lot of infrastructure stocks within those, and we're expecting a large infrastructure plan to come if the Democrats take control and then work with President Trump to get that passed. On the Republican side, if you saw a Republican sweep, we'd see things like financials and energy and consumer discretionary all do well because you have the tax cuts that have gone into place since December, and they're good for consumers as well as businesses, as well as the president trying to push energy policy and financial deregulation.
Peter, is all of this too optimistic? Could the midterms really rock markets?
Well, I think when you look at rolling 12-month periods of the S&P 500, you're going to see 3/4 of the time the market's higher anyways. So is it because of midterms? I think that's a tough narrative to attach to. There's not a lot of data to truly support it, other than the fact that the market's up more often than it's down over longer periods of time. And I think the earlier point made that if you're owning the broader market, and what we're telling clients at Plancorp is, if you're owning the broader market and you're globally diversified, you focus on more of those things that you can control than worrying about who's in office. But I do think as you look at valuations, something like political landscape certainly does play that psychological role within valuations that is part psychology, part calculus.
Jeannette, I guess I wonder, let's say the Republicans hold both houses at this point. Do you think that there is any specific economic agenda, let's say in this next Congress, that investors are really looking toward? It just seems like once you got the tax cuts in place, that was most of what investors were expecting or hoping for. So I just wonder how high the stakes are for economic policy in the next term.
So I think you definitely could see a continuation of some of the tax policies. The Republicans have been trying to push tax reform 2.0. There also is a potential push that they would try to lower the tax rate on capital gains. So you could see something like that happen, which would benefit financials as well as obviously market holders. But then I think the other thing that you need to think about too is if the Democrats come in, there's also a possibility that they could try to pull back Trump's deregulatory agenda, and then that could hurt different sectors. And you've seen a lot of the market, I think, enthusiasm and confidence coming off his deregulatory agenda.
So, Peter, what do you think that we should do here if we're investors going into the midterms? We've got 32 days to go, knowing what's happened historically, but certainly knowing that history doesn't always mean it will repeat itself going forward. How are you positioning?
So at Plancorp, we're telling our clients that we're at all-time high valuations, and I think that makes a lot of people nervous when you stack on things like the trade wars, with the uncertainty that comes with midterm elections, with interest rates rising. Particularly, we saw a jump in the 10-year today. But ultimately, you got to remember that in order to earn these average returns that we're all attracted to, you have to be willing to accept losses from time to time. And once every 12 months, the S&P 500 in bull markets has typically seen a correction of 10%. And roughly every 3 years, you see roughly a 20% correction there. And so I think as we're going into the year end, I think you're going to have a lot of headlines. I think if there is any evidence of political gridlock, that typically has been something that's been cheered by markets in the short term. But in the meantime, I think you'll look at earnings, I think you'll look at interest rates, and that'll play a bigger role in market sentiment than who is in Congress.